You've got to understand with Trump, it's the signal you want to focus on, not the noise. And I think he's doing some really amazing things. I've come to the conclusion in the last couple of months that 50% of the population in any country has Trump derangement syndrome. It's the policy you want to focus on. And I say for the crypto industry, the policies look pretty good right now. I think where we're going with this whole thing is the US is going to set reciprocal tariffs 10 on 10, both directions. And essentially Trump, you may say this is a brilliant move, but he's basically created a VAT tax in the US without calling it a VAT tax. It's called a tariff. These tariffs are essentially consumer taxes. That's why the market is moving back. In fact, it's recovered all of its losses since April 3rd, and then some, in the most volatile, unbelievable moves, 1,000 points a day.
Yeah, it's been wild.
And here we are at Bitcoin at over 100,000.
6 months later.
It's been a very tough couple of days in crypto as we just witnessed the biggest liquidation event in crypto history of almost $20 billion wiped out, almost 20 times more than that of the COVID crash alone. 1.6 million wallets were liquidated. Altcoins crashed from 40 to 90% on some exchanges, and nearly $1 trillion in value erased in just a matter of hours in the crypto industry. This was brought on not only by weakness in the market, but triggered by one crypto whale, reportedly an inside trader, as he opened a massive short position up to just 1 minute before Trump made his mega announcement that he was willing to put up to 100% tariffs on China. This move seemed like less of a hedge and more of an all-in bet on a full-out market collapse, which happened minutes later and resulted in almost $200 million in profit for that crypto whale. Former BitMEX CEO attributes this massive crash not only to the short position, but due to the fact that exchanges, the centralized exchanges, triggered their auto liquidation on cross-margin positions, which is why altcoins got hit so hard. Now, I'll get into all the reasons why this potentially happened and where I believe the market is headed from here. But first, I want to roll a clip from just 1 week ago on my YouTube, where I warned that a move like this could be coming, not only amidst market weakness, because after we saw that all-time high, we didn't get strong continuation, but also because of statistics. And those stats show that historically, after government shutdowns, we do tend to get a sharp correction. And that also lines up with other confluence from other statistics from green Septembers. Now, I came out and said that when Septembers are green, the Q4 is historically phenomenally green, but a few things could happen. Number one, we could see the low of October come in within the first week, and seldomly, but potentially within the second week, where we could come all the way down to the low $100,000. Now, that move seemed much less likely at the time, but I did say that it would scare the living hell out of people and that it potentially would be an excellent buying opportunity. That being said, I didn't think it would happen this fast, but we were preparing for it on this channel due to history and how things have played out previously, especially with the green September, with the government shutdown, and with all of the stats that I presented. So before I get into this, let's roll that clip. It's all good, but I do want to prepare you on this channel for potentially one more drop, as the stats say that historically in the previous government shutdowns, Bitcoin has rallied up and then dropped sharply right after. Those statistics say that the low of October typically comes within the first week, very seldomly in the second week, but very early on in October. Now, a drop like this would massively freak out a lot of people in this market, but not you in this channel, because we're going to be prepared, and I believe it would be an excellent opportunity if it did happen. If we were to get that sharp correction now, as we've seen in previous cycles, we could drop all the way down to around $100,000 for Bitcoin. It would scare everybody, scare the hell out of everybody. A lot of people would fold, a lot of people would sell, panic sell, and I believe that would be an excellent opportunity, and that could be happening as quickly as this week. Now, this is just for us on this channel as a learning experience, that although these scenarios don't seem likely at the time, they are possible and we have to be prepared for them. I did buy on this past dip, but my heart does go out to all the traders who have had a very hard time during these times and have been affected by these liquidations, because I know that when this happens, the exchanges shut down. Some stop losses don't get triggered because there's not a lot of liquidity. There aren't a lot of bidders for these altcoins when these massive liquidations happen. Also, potentially another big market maker sort of got unwound, and a lot of things potentially could have happened. But those of you who are crypto veterans know that this stuff does happen, that exchanges do shut down at the worst possible time. And that's why we do use people like Caleb and Brown and now iTrustCapital to buy over the counter, because we can guarantee you that we can get those positions filled. And I also want to say that my heart goes out to Ukrainian crypto trader Konstantin Galich, who reportedly took his life over this. And guys, I just want to say that money is never, ever worth ending your life, and you can always make it back, and you can always come back. So my thoughts and prayers go out to his family, and it's very, very sad. And I don't want to see any of you affected by that, which is why we're going to double down on our trading education. Starting tomorrow, we're going to bring our lives back every single day, daily, with one of the top traders in the entire crypto space, who's going to help you with leverage trading, with spot trading. And also, we've got to go back to the roots, guys. And we got to remember, for me, what works best is having just one spot crypto holdings that I don't touch, I don't use leverage with. They're just in cold storage, and I'm saving them until my buy orders are going to be triggered. And then a small percentage that I trade with. Now, we will go over what cross margin is in this episode as well, and teach you how to protect yourself from that sort of scenario. But that being said, these situations can never be foreseen. And, I'm sorry to all of you who are affected, but let me tell you, you can make it back. And that gets to my next point, which is, do I believe this crypto bull market is over? No, I absolutely do not believe it's over. And it's not because I'm a perma-bull, although I am a very optimistic person and I have very high conviction in my bets. In fact, I put my money where my mouth was during this dip, and I did buy more altcoins, primarily altcoins, a little bit of Bitcoin. But I did. I prepared myself mentally, and I said, if this is going to happen, I'm going to hold my breath and make that gut-wrenching buy during these days that are scary and crazy, because that's part of my strategy, and it's in those long-term high conviction bets. Now, I have a long-term mentality, so if something were to happen and I had to be even more patient, I would be able to. That being said, I believe that this crypto bull market is far from topping, and I'm going to give you a few reasons as to why I believe so, apart from the fact that we just retested that major zone of support right down to the 100,000. So history shows that during a crash like this, which is 20 times worse liquidation-wise than the COVID crash, statistics show that if we're still in a bull market environment, which we are, we will have a corrective movement and some consolidation for a while, which I did point out in the video, but ultimately leads into blast off. Why? Because I believe that this was the great reset. All of the leverage flush, got that all out of the system. It was sort of a weak market anyway. It's more of like, show me the charts and I'll tell you the news. This was already in the realm of possibilities. And although it played out in a fashion that none of us could have foreseen or expected, it did play out. And now what's coming, I believe, is the next most bullish wave of this cycle. It will require a little bit more patience, but those of you who watch my channel do have that patience and do have that conviction and do understand that these things take time, and it'll never be just a straight shot up and a bed of roses. This is going to be tough. It's the great awakening of the world. We are going digital. This is the decentralized revolution, and it was never going to be easy, but I'll tell you one thing for sure, that surviving is thriving in these markets, and that if you can survive this and you can continue to just stay focused and tune out the noise, you will do exceptionally well. That's another element I often say on this channel, and I had Kevin O'Leary on my podcast. We talked about Tariffs 1.0 the first time they came out, and he said the tariffs are just noise. Tune out the noise and listen to the signal, and the signal is that crypto is bullish. And for the first time ever, we have tailwinds. We have support for our industry, and Trump's legacy is making the crypto market revived again, right? And making the whole equity markets, that is his everything, right? So that combined with another important fact that I don't want you to forget, that nothing has changed fundamentally. We've only just seen the very first Fed rate cut. Gold is at its highest value ever and its highest RSI in like 45 years, okay? Ask yourself this question per Raoul Pal. Has the liquidity cycle and the business cycle topped, or is it still rising to finance the 10 trillion that is meant to be injected into the markets in the next 12 months? The writing is on the wall. In that video, I told you that if we do hit those very low 100,000s, that we'll probably see a much longer consolidation period before blast off. But I really truly believe that cementing that foundation is going to be the spring that we rocket off of for the last parabolic part of this phase. And I'm going to show you charts to back that up. And I'm also going to show you where I think we are on the macro scale in Bitcoin, as well as digging into some of the details as to what happened during this crash. So if you like that, smash a like, hit the subscribe, and stay tuned, guys. We are going to crush it. I will be here for you every step of the way, and I truly believe that these next 6 months will be life-changing for us. So stay dialed in, stay focused, stay cool, calm, and collected during these times, and just know we will all make it through. And on that note, let's get right into it. Okay, so this is the infamous tweet that started it all, but just remember that these things don't trigger the problem. The problem was already the weakness in the charts, right? And that was exacerbated and tipped off and potentially triggered by that short position from that insider trading whale, which then triggered a cascading liquidation effect across all the centralized exchanges, which led to devastation. So don't get me wrong, although I think this is long-term going to be bullish and that we are going to pull out of this and it is going to be a mega blast off, I'm not discounting the fact that this was a very, very, very hard situation for many people in this industry. And I want to help you either come back out of whatever happened to you or to continue to be able to navigate these markets properly, right? And that's why I'm going to start the lives from tomorrow with Rob, who used to be at the Capital Mindset that has now come over to the Hive, and CryptoGents, another project that he's working on. He's going to lead us through all of these moves where Bitcoin is and teach us how to use leverage, but to manage risk, right? Because this isn't the takeaway isn't don't leverage, don't use leverage, don't trade. The takeaway is we need to manage risk properly, right? And part of that is not using cross margin. Now, what cross margin essentially is that you leverage your entire portfolio in the event that one of your positions is triggered, right, is liquidated. And so that's much riskier than using isolated margin. And we'll learn the differences with Rob. Also, a very small percentage of your portfolio to trading, and not to get greedy and always to pay yourselves, guys. It's easy to say, it's easier said than done, but I do want to teach you how to do that. And that's why we're doing one of the biggest deposit bonuses ever with the BY DeFi exchange, who made it through this turbulent time very well. And the team was very supportive. So the link is in the description below. A massive deposit bonus. We're going to teach you how to trade starting Monday. So do sign up to that link, and you'll also get our trading course for free, our beginner's trading course, by showing us that you did sign up to that link and you're supporting the channel. So on that note, let's dive into what actually happened here, okay? First up, Trump comes out and he says, we'll impose 100% tariffs on China starting November 1st. So it turns out that China took extraordinarily aggressive position on trade in sending an extremely hostile letter to the world, stating that they were going to, effective November 1st, impose large-scale export controls on virtually every product they make, and some not even made by them. This affects all countries without exception, and always was a plan devised by them years ago. So this is a pretty big thing that Trump comes out and says, right? But based on the fact that China has taken this unprecedented position, and speaking only for the U.S., we who are similarly, or nations who are similarly threatened, starting November 1st or sooner, depending on any further actions China may take, the United States of America will impose a 100% tariff on China. That completely spooked the markets, okay? And this is consequently what happened, right? Just the beginning of what happened. But it's like almost it just feels like crypto's so crazy because we live so much in just a matter of days, what could feel like months or years, right? And then he comes out and says, days later, President Trump says, don't worry about China. It'll all be fine. President Xi doesn't want a depression for their country, and neither do I. And then you have the Vice President J.D. Vance saying President Trump is willing to be a reasonable negotiator with China. And then you have the White House official says financial markets will be calm in the coming weeks. So, I mean, there's a lot going on here. And in my opinion, nothing has changed in the fact that the U.S. is using tariff negotiations to wield its power, in this great financial reset. I mean, Trump came out and said it, and he said, our technology is too old, it's too dated. Our financial system is just a dinosaur, it's dying. And, a lot of things in the world need to change. And I think that this is the great awakening worldwide, spiritually, in so many different ways. And that doesn't come out without its trials and tribulations, right? But we're already seeing softer tones come out, and just more fitting to, in my my perspective is that it's used as negotiation tactics, and that, you know, some sort of agreement will be reached. And it's not just me, actually. Polymarket now says that the stock market is, while the stock market is closed, Polymarket is already giving us the real odds of Trump's 100% China tariffs actually coming into effect, which is 10%. So basically, people think that either President Trump is bluffing or that an agreement will happen before that comes to fruition. And it's not just the bluff, it's that China doesn't want that either, because it's not just devastating to the American markets, but also to the world, right? So I firmly believe that there's a big chance that this will get resolved, and that we just have to continue to tune into the signal, think long-term, and don't get too affected by the noise, right? Like, that is the number one most important thing, is just to stay calm and stick to your plan, even during days like this, which is why I did hold my breath and I did buy. Okay. And if you didn't have money to buy, then just be patient and have conviction in what you've invested in, and never invest more than you can afford to lose. That is the number one thing. Okay. But long-term thoughts and high conviction will lead you to do phenomenally well in these markets. And also, I just want to commend you. If you've made it through all of this, and whether you're new or a crypto veteran, you've survived a 4-year bear market, an FTX crash, Luna and UST to zero, 3AC fund collapse, CZ jail, Binance bank run, Germany selling, Mt. Gox unlocks, Russia-Ukraine and other wars, World War III threats, Trump's tariffs, and altcoin season is finally ready to start. So you've made it through all of that. You are not going to give up now. And if you are one of those traders affected by all this, then now is most important time, more than ever, to dial in and try to make it back. Not revenge trading, but learning from those mistakes and coming back because you can, right? Because we have not witnessed that last parabolic phase of this cycle yet, I firmly believe. And I'm going to give you dates for when I believe this cycle could top, and reasons why I think it hasn't topped yet, apart from the reasons that I gave in the intro, which are fundamental macro reasons. So this is just for context. The COVID crash was $1.2 billion in liquidation, FTX $1.6 billion, and this massive event from Friday, October the 10th, $19.16 billion in liquidations, the biggest liquidation ever, almost 20 times bigger than COVID. So if you made it through, congratulations. I mean, you know, you made it through the worst. I truly believe we're through the eye of the storm. We're going to have some consolidation, maybe down and to the right for a little while now, and then we'll be ready for blast off. That's just what I believe based on all of the facts present. Now, if something changes, I'll be sure to let you know, but nothing has fundamentally changed. We've come down into that support zone, that bull market support zone in the low 100,000s, and so far we're still doing okay. And I firmly believe in what Raoul Pal says here. All of this is noise if you don't use leverage. There are only 2 questions you need to ask as a long-term holder. Will tomorrow be more digital than today? Meaning, are you in the right industry? The answer would be yes. Has the liquidity cycle and business cycle topped, or is it still rising to finance the $10 trillion that needs to roll in the next 12 months? If the answer is yes to both, it's noise. If your time horizon is 5 years plus, then the second part is just noise too. Buy the fucking dip and don't fuck this up. Pardon my French. Sorry for cussing. I really identify with this, okay? I don't even think that you need to just resort to that, although that is the mentality you should have. I do believe that we are in for the next parabolic phase of this cycle, and that we're nowhere near topping signals yet, okay? So hang in there, guys. Hang in there. I'm going to go over some more charts. Keep watching. Stay dialed in, and don't give up. Never, ever give up, because you are right there. Now, I'm going to go through a little bit more about what happened. Yesterday was one of the craziest trading days ever. Let's see. So let's break down what happened. Bitcoin dropped more than 10%. Ethereum followed. Altcoins crashed 40 to 90. Over 1.6 million wallets. Roughly 20 billion in positions. And something felt off. About 30 minutes before Trump's official statement, a major whale suddenly doubled their short positions, which is what CoffeeZilla spoke of. And the timing was almost too perfect. Coincidence or something else? As the market melted, cracks started to show everywhere. And that's actually what happens. This is a stress test for the industry as a whole. And that in itself can be a good thing, because if we can make it through that, then we can make it through big major liquidity crisis events and know that we'll come out the other side. So large cap alts tanked, stable coins like USDE depegged, major exchanges saw cascading liquidations. This wasn't a retail panic. It looked like funds or trading desks were forced to unwind. It was a full-blown leverage reset. And while it felt like a disaster, market veterans have seen this before. These violent sell-offs don't end bull markets, they restart them. I truly strongly believe this, because now leverage is cleared, we can hands are gone. Strong hands are quietly buying the dip. And that, if that was you, congratulations. And if it wasn't you and you just held, congratulations. Trump's tariff shocks may have triggered the crash, but also flushed out months of excess leverage in one move. It's also much better that it happened in one move. It's like, instead of slow bleeding, which could happen forever, I mean, your alts could slow bleed into death, we ripped off the Band-Aid, got it over with, and now we're clear to start building that foundation again before we hit blast-off mode. When the dust settles, they will likely mark the foundation for the next leg up. The headlines scream market crash, but zoom out, the structure didn't break. It just reset. Whales have re-entered, retail is panicking, and history shows that that's exactly how new bull runs begin. That is right. That's how they begin. That's not how they end. We don't end with alts on the floor. It's just not how I see this playing out. And also, it's not about how I feel. It's about the stats and all of the topping signals, which have not fired and not even close. Let's see how these coming days play out, especially Monday when market opens. So we might get one more dip to revisit that crash, right, to those lower 100,000s. I'll show you charts now, but I believe that we've seen the worst and that the eye of the storm is over. So here's CoffeeZilla saying the hyper-liquid whale shorting BTC ETH yesterday was placing shorts up until exactly 1 minute before Trump threatened China tariffs again. Yeah, I mean, there is quite stark evidence that, there are insiders that are trading here that do know. And a lot of people are saying that this is so unfair and that crypto is messed up and whatever. It probably isn't fair, but also, let's not depend on what happens with that market manipulation. Let's try to ride the waves and let's try to shield ourselves and protect ourselves from it. This is a very nascent industry. It's very new. The market cap is very small and it's very easily manipulated. And we just have to deal with that and understand that that's where we're at in the grand scheme of things and try to navigate that as best that we can. Now, while it's wrong and, insider trading is not ideal in any way, shape, or form, let's more focus on what the charts are saying and tune out less about the reason why. Although for you conspiracy lovers, I'll get into that too in this episode. So Arthur Hayes here says, word on the street is that the big sex's auto liquidations of collateral tied to cross margin positions is why lots of alts got smoked on the way down. Congrats to all you stink bitters. We won't be seeing those levels anytime soon on many high quality alts. Now let's break down what this means for those of you who are kind of like, what does all this mean? Okay. So when traders use cross margin, all assets in their margin account act as collateral for their open position. If the market moves sharply against them, the exchange automatically liquidates their collateral to cover losses. This means forced selling happens regardless of whether the trader wanted to hold or not. Why alts got smoked? Many traders use altcoins with smaller and high volatility as collateral, meaning there's not a lot of liquidity to back them up. If a very, very big sharp dip happens, there's no bidders, guys. There's nobody to soak up that liquidity. And that's the problem with using those as collateral. So when Bitcoin or ETH dumped, margin calls and liquidations kicked in. Exchanges sold off huge amounts of alts to cover traders' losses, causing prices of those alts to crash harder. So the exchanges had to sell off in order to cover the losses, and that just triggered more liquidations, and it's just one big melting pot of disaster, right? This creates a cascade effect, more liquidations, more selling, deeper crash. And a stink bid is basically just a low ball buy order placed for far below the current market prices that are taken advantage of during crashes. They're bargain entries. So there are people that do that and they profited from that. So he's suggesting that we won't see those artificially low prices anytime soon. And I actually really do agree with him. And just as also for context, for people who don't know how bad it did get, I mean, Atom almost basically went to zero. Sui went to 56 cents, Aptos to 75, Say to 7 cents, but Link to $8. I mean, I can't that was from a cycle and a half ago. Okay. And Cardano to 30 cents. These are all really, really crazy numbers. And it just goes to show that, while Bitcoin is great for preservation of wealth and also wealth building over time, many people use the altcoins as vehicles to amass that wealth, right? And that's okay, but we have to be aware of the risk that comes with it. And just remember that Amazon corrected almost up to 90% in the first 10 years. That in 1 year it corrected almost up to 90%, had 50% drawdowns. I mean, massively volatile in its first decade of existence. So I kind of equate Amazon to, these softwares or the altcoins, because the strong ones will thrive and survive and make it through. And after we get through that volatility, we'll see the light at the end of the tunnel. And that's why we have conviction in our high conviction plays, right? And that a very small percentage of the portfolio should be for those very high risk, low cap coins, because this is what can happen. So these are the charts, some of the charts that just some of many, right? I just want to give you a few just to consolidate this and make it more concise as to where we're at. So this is from Crypto Crew University. The 200 EMA intersection has preceded almost every all-time high. Pattern points to a Q1 to Q2 2025 top, he means 2026 top, if cycle lengthening continues. Heat map is not red, upside still open. According to this heat map here, our projected 200 EMA intersection is set to come on January 5th, 2026, and that would place our topping pattern for this cycle around Q1 to Q2 2026, and altcoins sometime after that. I think that's a very concise timeline. I think that now that we've had this kind of big crash, we're going to be consolidating for a little while before we see new all-time highs and potentially a market cycle top mid 2026. That does coincide with a lot of the factors that I'm looking at. So yes, I think that now this is something that we can be paying attention to. And let's have a look at the COVID crash, okay? This is actually really telling. This was the massive dip here in the COVID crash, March 2020, and we spent up March, April, May, June, 2 to 3 months consolidating before we then went on a wild tear to the upside. And now here we are again. Trump's China tariff crash 2.0, okay? Maybe we'll spend 2 to 3 months consolidating before we go up for that next parabolic rip phase, okay? This is historically what has happened. It might not rhyme, but it often repeats. And then I'm going to show you these three charts next to each other. And it's actually very similar to the pattern. Here on Black Monday, we had this long wick down. We went up and to the right, we consolidated, and we actually did have one more retest down to those lows before we took off in a massive way. Same thing happened for Tariffs 1.0, right? We had the first dip down, consolidation, and then we had the second sweep of those lows and then up and to the right. So that being said, could we see a sweep of these lows and around the low 100,000s to just under 100,000 one more time? It is entirely possible. I think we could get that, but then I believe it'd be blast off and we get the next leg of this cycle. And don't forget, we also have the Clarity Act set to happen in October and November. These are all catalysts and again, far from being over in my opinion. And here we have the parabola that Bitcoin has been forming on the 1 week. This is from Crypto Rover. The Bitcoin cycle is almost over. Okay, it might be true. But it also shows that we're still following this parabola upward and that we could still see that price projection that I gave for, those bullish Q4s, which is Bitcoin to like $170,000, right? I gave the stats presented by Eric Crown that said that Bitcoin after green Septembers, often in Q4, will at an average of 50 to 60%. Okay, so those are just following more off those stats. There's more confluence here. And yeah, I think this is not over, that we could be topping in Q1, Q2, 2026. And that's what I believe. That's how I'm playing this. And that's how I'm getting prepared. Also, you have to take a look at the ETH BTC chart, actually looking pretty good here. So much potential left for ETH versus BTC. Fundamentally, we haven't breached any critical levels, right? We've just fallen into support zones. So here we have ETH BTC at the perfect support zone retest before a bounce back. 0.3 to 0.032 is a very strong support level for ETH BTC to hold price reversal. So it looks like it's wanting to reverse here and that it's got a lot of legs left, a lot of gas left in the tank, guys. And I did buy some ETH on this dip as well. And I think that even though we have some turbulence to come, that we are going to see a very, very big leg up in a massive way when this blows over. So we've also got an update. While retail is panicking, the entire market is panicking, quite frankly, Tom Lee's Bitmine buys 28,000 Ethereum worth 480 million during this crash, okay? So big players are stepping in and they're buying. Now, I see a lot of comments like this. Crypto is a complete scam. The market dumps 70% and they don't let you cash out. I tried on Coinbase, Crypto.com, Kraken, and it all gets an error. You guys, we know that this happens. We know that this happens in the markets and we just have to deal with it as best as we can. And it's been happening since the beginning of time in crypto, right? Like all of the veterans know this. That's why I have an account with Caleb and Brown, which is an OTC, over-the-counter buyer. So you don't have to worry about this stuff. Now, I iTrustCapital, the partner of this channel, a sponsor of this channel, also has a premium custody trading desk where they can, where you can buy and sell and trade crypto on that as well, which I'll get into in a future episode. But you know, we know that this happens and you just have to be prepared for it. And here's sort of like a chart on the play-by-play. So I thought that was pretty cool. 9:40 a.m., crypto begins mysteriously selling off. 11 a.m., Trump posts massive China tariff threat. So the market starts to bleed down slowly, right? And then 4:30 p.m., a large whale opens a multi-million-dollar short. 4:50, Trump announces 100% tariff on China, which was this massive candle down. 5:20, crypto liquidations hit. So this was the short here. And then the auto liquidations triggered by exchanges of a record 9.5 billion, it says here. And that's how it played out. So yeah, you can see that one thing led to another, and that led to a massive cascade effect. Here we have the S&P 500 is a very critical support zone since April 2025. This support zone is held up during every dip. So the U.S. stock market opens tomorrow, and we'll expect some volatility. If Trump or Bessent comes forward and hints about any trade resolution, I think a rally could happen. Yeah, I believe so too. So let's see if that support zone is going to hold for equities. And then on the flip side, we've got Binance covers 283 million in user losses after its tokens depegged on Friday. And 225 million worth of shorts were liquidated in the past 2 hours. So the scales seem to be flipping, the tides are turning. And Michael Saylor, of course, hints at buying more Bitcoin. Don't stop believing with a Bitcoin B, hinting that the next buy for MicroStrategy is imminent. Like I said before, it was a great stress test for a lot of the crypto industry. And Stanny, the founder of Aave, reports today Aave experienced the largest stress test of its $75 billion plus lending infrastructure. The protocol operated flawlessly, automatically liquidating a record 180 million worth of collateral in just 1 hour without any human intervention. So once again, Aave has proved its resilience. So yeah, this is really good to see in conditions like this. If we can survive this, we can make it through to the other side, guys. And of course, yours truly, Larry Fink from BlackRock, was buying the dip in a big way. I think one of the best dip buys here, if I do say so. I don't know how many people bought at 105, but BlackRock bought 45,000 Bitcoin worth $5 billion at an average price of 105,000 during this crash. They didn't hesitate. They bought the dip. Would they be doing that if they believed we were a market cycle top and that we were going to cascade down and that this was all over? I strongly do not believe so, guys. Smart money is buying, period. And I did as well. I put my money where my mouth was. I tried to stay control of my emotions, and I did buy. And I want you guys to just think about this as we go forward, as we experience more volatility, and just tune in every single day, because we're going to be giving you the alpha, and now we'll be charting everything with Rob, who's one of the top analysts in this entire space, and we'll be there for you every step of the way. So there's no need to panic. Let's do this together. Tune in tomorrow. Also, the CPI report, which is originally set for Wednesday, October 15th, will be delayed due to the government shutdown, which we're also surviving. And that'll be up on October 24th. And just a little note here to end on some positive optimism. The pullback, Tom Lee says, isn't a red flag, but a buying opportunity driven by AI innovation, blockchain growth, and a Fed easing cycle still intact. Remember, nothing has changed fundamentally, and we're in a bull market, guys. And so, as Raul Powell said, buy the effing dip, right? That's it. That's all I got for you today. I hope all you're safe and okay, and you're doing all right despite this difficult time here in crypto, and that you had a good weekend, and I'll be there for you tomorrow. So without further ado, I'll see you tomorrow.